In the latest turn of events surrounding US President Trump's tariffs and their global impact, China's manufacturing sector contracted for the second consecutive month in May. This comes despite a recent pause in the US-China trade conflict. According to China's National Bureau of Statistics, the Purchasing Managers Index, a key gauge of industrial activity, stood at 49.5%. While this is a slight improvement from April, it still signals a slowdown in growth. Meanwhile, President Trump has announced plans to double tariffs on steel and aluminum imports from 25% to 50%. U.S. steel prices have surged 16% since January, now reaching nearly $1,000 per metric ton, considerably higher than prices in Europe and China. In a significant development, Trump has endorsed a deal for Japan's Nippon Steel to partially acquire U.S. steel. The agreement reportedly includes major investments in American steel facilities, a U.S.-based leadership team, and a government golden share that gives veto power over key decisions. However, full details of the deal are yet to be disclosed. Yesterday, President Trump accused China of violating a bilateral agreement to roll back tariffs. He said China had breached terms related to tariffs and trade restrictions on critical minerals, issuing a veiled warning of tougher measures against Beijing. Lastly, representatives from Pakistan are expected to visit Washington next week to discuss tariffs. Pakistan faces a possible 29% tariff on its exports, triggered by a $3 billion trade surplus with the U.S. as part of the broader tariffs announced last month. Now we have guest Ross Feingold. He's a political analyst. He's joining us from Taipei. Thank you for joining us today. President Trump announced he will double steel and aluminum tariffs to 50%. What impact could this have on U.S. industries and global trade?
It's certainly good for U.S. manufacturers of steel and aluminum. They're going to face less foreign competition. One of the main issues of concern from the domestic manufacturers is foreign competition, and at times that foreign manufacturers are dumping their products in the United States at below cost. This is a long-running problem in the industry. However, the other side of the equation is that it's going to make steel and aluminum prices probably more expensive for end users in the United States, such as in the construction industry or the auto industry. Eventually, those costs get passed on to consumers, but it will certainly protect the industry, and it may also protect jobs in the industry.
And Trump claims these higher tariffs are necessary to protect domestic steel facilities. How have U.S. steel companies responded to these measures so far?
U.S. companies are big fans of the tariffs. Again, it helps protect them from foreign competition, and they've long complained about foreign competition and cheaper imports from other steel-making countries. So the industry has long advocated for higher tariffs on imports. They're getting it with President Trump, so they're very happy about it.
Now moving on to Pakistani representatives are going to the U.S. next week to discuss a possible deal on tariffs. From what we know, what are the main issues on the table in these talks?
The issue is pretty simple. Pakistan has approximately $3 billion annual trade surplus with the United States. There's an important lesson here that so we think of some countries like China or Taiwan, where I'm speaking from, that have trade surpluses with the United States into the tens of billions or the many tens of billions of dollars. But even a country with a $3 billion trade surplus is not going to escape the attention of the Trump administration and the trade policymakers in the Trump administration. The challenge for Pakistan is they don't have a good political relationship with the United States. They didn't have a good political relationship with the first Trump administration. That did not improve under the Biden administration. And now that we're into the second Trump administration, it's clear that India has a great political relationship with President Trump, and Pakistan simply does not. So the U.S. government, the Trump administration, is not going to be doing Pakistan any favors in this negotiation, and Pakistan better be prepared to make some serious concessions.
And moving on to India, India is close to a deal with the U.S. and faces 26% tariffs. What advantages could this trade agreement bring for both countries?
A fair agreement to both sides is going to hopefully increase trade between the two countries. There's a lot of American companies who are very eager to be in the Indian market. There's a lot of tariff barriers as well as non-tariff barriers that prevent the expansion of American industry, American companies in India, and they really want to be there. They look at it as a market with amazing potential. So we'll have to see some serious regulatory reform, some movement on inbound tariffs by the Indian side, and I think the Trump administration will be willing to lower those tariffs from 26% to potentially even a much lower number. So there's potentially a win-win outcome in this negotiation. And I do think, to be fair to President Trump, this is one that he genuinely wants to see a good outcome. He has such a good relationship with Prime Minister Modi. He knows that India and the United States need to have a good relationship because of China-related issues. So I think this is one that President Trump genuinely wants to see done.
Thank you very much for the insight. Ross Feingold, you will stay with us for our next story. And now we move on to our next story. President Trump